if you're struggling to find profitability and consistency in your trading, you need to watch this video about how I use order flow to analyze the E-mini S&P 500 futures to take high probability, high quality, repeatable day trades every single day in order to make money consistently in this market. So what I want to share with you guys today is my high probability, high quality system that I have in place where I just take the same setups over and over and over again that are repeatable and evidence backed in order to consistently profit. So first off, I'm going to start, this is the E-mini S&P 500 futures, ES 0625. So basically today's trade, this is the trade that I'm going to showcase to you guys. I actually took one stop loss in here trying to get long, but I inevitably had a winner from a long off these 54.38s with my stop loss just down here at these 54.34 50s, targeting these 61.50s for about 23 points of profit on about 4 points of risk. So essentially what I want to go over is what I saw on the order flow and on the charts in order to be comfortable and confident that I could take this setup. And all of my setups are repeatable, so they're not just one-time things that only come around every once in a while. These setups are setups that you can use every single day, if not every single other day, in order to consistently profit. So what I want to show you guys is this volume profile here. I have it drawn from the 9:30 cash open, which you can see down here, 9:30, and then the volume starts on the day. I have that drawn from there all the way to current market price, where I decided to get long down here at these 54.38s at 10:21. Okay, so just about 51 minutes have gone by, and this is the entire volume profile. What this shows is all of the volume that has been accumulated at price throughout the morning. Okay, so instead of seeing the volume down here like this over time, this shows you all the volume at price that is accumulated. Okay, this red and green essentially shows you delta by price. What delta is the net difference between the ask volume and the bid volume executed. So you see this big blotch of green up in here? This means that in this entire price area, there was a lot of aggressive buying. Okay, there were a lot of buyers aggressively hitting the market. And this big blotch of red down here, in this blotch, you can see that there were a lot of people aggressively hitting the market, selling it. Okay, that's all this shows. So I use this to gauge buyers and sellers throughout the price structure. So what I want to go over to start with is the fact that this volume profile, most of the volume that has been executed on the day so far is between 54.57 and 54.79. Okay, so we are quite far away from that. To the top edge of the 57s, where I entered long, was just about 20 points beneath it. Okay, so this volume profile, the big P-shaped profile, all the volume was done up here on the day, and then price just dropped out of this area really quickly. Now, what I found interesting about this is that price dropped right beneath this pre-market low area right in here before we took off for about 30 or 40 points of upside. So what I was looking for was that this VWAP line in here at these 54.40s, as soon as we broke below that here, as you can see, this 54.40s lines up with this SMA on the footprint chart. This is a footprint chart. It shows you all the volume done on the ask and the bid through price swings. I have this set to a 32 tick range volumetric footprint. So each bar that is represented here, that represents 32 ticks, which is 8 points on the S&P 500. So my confirmation for this trade essentially was seeing price come down into this level here and bounce at these 54.33s. Okay, once I saw this bounce, after price came through here, we developed a lot of volume right down here beneath these 38s. Okay, now something about these 38s is that look at where the price started to upswing very much in here. These are the 38s right in here, this low. So right below this low, there was a lot of volume executed. You see this big volume node here that's executed right beneath this low? That tells me that there are some people down here who are willing to do business to bring the market higher. Look at all this green, right? You see every candle, look at this candle, minus 19% delta, minus 11% delta, minus 11%, and then bam, plus 3%. And look at the buying, 2,700 compared to 1,800, compared to 24, 13. all this move down, and then the buying starts. Coincidentally, right below these 38s. What's over here? These 38s. So there is a bidder in here who is sucking up the sellers and the people who are willing to do business trying to short the market. And he's sitting in here and he's just collecting, right? And then what you essentially see are on the move back up, you see these market buyers start to enter the market, and the delta turns quite positive. It was like negative 1%, I think, when I entered, and it closed up 3%. So this candle right here represents buyers entering the market. My confidence and conviction in this trade solely came from the fact that I found buyers in the market very, very far away from the mean, okay? There was not much volume being done down here. Look at this amount of volume compared to this amount, okay? Just a couple of minutes earlier, just 3 or 4 minutes earlier, price was all the way up here at these 75s, just kind of hanging out. This yellow line represents the VPOC, so the highest volume traded price on the day, okay? This is a mean reversion trade, so I got long speculating that price would come back up into this value area range here where 68% of the volume has been done on the day, okay? This range will change slightly over time. Like here, I'll drag it forward a little bit, and the range will widen slightly, and you'll see some more volume start to come in down here. But this is what it looks like when I close the trade at 10:35, okay? So we were back in the value area, and you see this very large low volume node in here, this big gap in this blue profile. What this gap tells me is that there was not a whole lot of transaction in between this price and this price, okay? Price pushed up right through here. It made a high, pulled back, broke through it, came back, and used the same area as a support once and then twice. And then on a third time, it shot right down through it, okay? And then price came up. After I entered, price came all the way up, and it ticked my target right here. I'm going to move this profile back for a minute. It ticked my target. And so I wasn't able to get out here, right? I should have been able to get out. I wanted to get out right in this area, in between these aggressive sellers and aggressive buyers, where it made the high, pushed through, pulled back, and then made a bottom right in the same area. I wanted to get out right here because I knew this was a confliction point in the market, and it was likely to be revisited at some point, okay? Auction market theory and mean reversion theory suggest that price will come back and fill in this gap and retest this area at some point in the near future. So that's what made me take this trade, finding these buyers all the way down here on the footprint and seeing price reclaim these buyers. I got long right here at these 38s. My stop was down here. I was actually using a mental stop, which is something I don't do very often, but I've been doing it in these volatile conditions recently to try and maintain my win rate. So I have been getting stopped out because of the volatility. So essentially, I put my stop down here, mental stop at these 34s. It was not revisited. As soon as price came all the way up to here, and I almost got out, but I didn't, and then price started falling, I put my stop up to break even. So that's why this red line goes like that. I almost got taken out for break even right here before it ran all the way to my target. And so essentially, something that I mentioned in my story today on Instagram at Bidsandoffers, I highly recommend you guys go follow that page. I post a lot of informative content on there, a lot of stuff that you won't really find anywhere else on Instagram through all the garbage content and reels that are flooding your pages. I hope this is really informative content. Something that I noted on one of my stories while I was in the trade is that all these people in here that started selling the market, okay? All these people in here that started selling the market, where are they going to put their stop loss? Where are they going to put their stop loss if they're getting short in here and selling it, trying to bring it down? They're probably going to put it right above this high right here, correct? So 54.61 and a half. Now let's go up to 54.61 and a half. Look at what happened when we broke above this high. Look at all this new volume that started to get executed as soon as that high got taken out, right? You see this couple hundred volume happen right just above this high where you saw 0 and 3, 17 and 27. We broke this high. Now, these sellers need liquidity to sell the market lower, right? So when the market comes back up in here, you have these sellers having buy limit orders up here. It's a trap. So these sellers come up and they're selling. There's buy limit orders up here, and that facilitates the auction to allow sellers to enter the market because sellers have to sell into a buy limit. So these buyers got trapped, price fell, they actually got into the money a little bit, and then it continued down. So basically, using some auction market theory, using mean reversion theory, using the order flow, spotting large participants in the market like this right in here. You see this difference between all this selling in here? No positive delta, no positive delta. We break below the EM or the SMA, and we break below this pre-market low area right here, the low of day right here at these 54.44s, and then bam, buying comes in. I spot the buying. I get long quick, 4-point stop, target somewhere up here that's likely to get hit again for 23 points of profit, and get out. That's pretty much all I got. The R multiple on that trade was a very good R multiple. Okay, it was just about 5. I want to call it about 5.5 if it was a 4-point. I'd like to give myself about a 4.5-point stop on that setup, but I can take that setup 5 times in a row, win once, and lose the rest of the times and be break even. Okay, if you can position yourself with your risk that well, you can take trades and not lose that much money. And when you do win, it pays for your losses. So you don't need a high win rate in order to in order to be profitable taking these setups. Okay, you can have a 20 or 30% win rate and be making money if you have really great R multiples. My average R multiple right now is anywhere between 4 and 6. Okay, most of my trades are over 4R. Sometimes they're over 6, but most of them are between 4 and 6. So that means that I really, like bare minimum, I really only need to be right 20 or 25% of the time to be profitable. So this is something that I want to share with you guys. I hope you took something away from this video. I hope you understood and learned some order flow, mean reversion, auction market theory perspective to implement into your trading. I have a lot of demand for a trading course. I have a lot of demand for one-on-one mentoring and things like that. I am in the process of building out a program that I believe will be very suitable for beginners and people to start implementing these things into their trading. I have a whole bunch of standard operating procedures and methodologies that I use, and it's going to be all the information, many hours of content stuffed into one package, and it's going to be affordable, and it's going to be very, very value packed, and I can absolutely guarantee that it will change your trading for good, and it might even make you a lot of money. So thank you guys for watching. That's going to be out soon. In the meantime, I'm just going to keep putting out great videos on trades that I take and my thought process, and I hope you guys take something away from it. Leave all your comments, all your questions, anything you guys want to say in the comments. I will respond to everybody. Don't be afraid to hesitate to reach out to me on Instagram or on YouTube at Bidsandoffers. Yeah, that's pretty much all I got. I hope you guys have a great day. Thank you so much for watching. I appreciate you all, and have a good rest of your night.